Hello, boys and girls, and welcome to the weekly review. This week we had another big rally. Didn't think we would get it this week, and was hoping it next week. Thought we would get the pullback before this started, like go back here and then have this week. But it didn't happen. And now let's look a bit at what happened. We closed the quarter, the month, and the first 6 months. On the long-term charts, big divergences. 6 months, 3 months. Actually, it's not really. It's just lower high, but it will turn into a divergence relatively soon. Coming back to the daily, um, let's turn on the June range and take a look, and then the Q2 range because they're quite interesting and they will be very relevant moving forward in case we have a larger pullback. So first of all, when we zoom on to the lower time frame, we almost had a pullback to the June mid. Actually, I think it was to the June mid on last week because the June mid was a bit lower, so this would have been a little bit lower. We had a pullback to the June mid, then we bounced up to the high and getting rejected again. Uh, and if we pull back during July or actually during Q3 in general, it's very likely that we will bounce off of the Q2 mid. If we do not, like if let's say during Q3 we go below the Q2 mid, it is very likely that we will take out the low here. I expect we will go slightly above this high early in July. And then if we get a reversal, we will have a setup for an engulfing candle. And the trigger for the engulfing target is uh, June mid not holding. So if we do this and then we do not hold, turn it into resistance, then it should go as and make an engulfing candle. So engulfing means we take out both the high and the low of the previous quarter range, and we will go here. But that's a long way away. We'll see if we get a setup. For now, it doesn't really matter. But any drop should at least take us to the Q2 mid. Any larger drop, I mean, at some point during Q3. Now, coming back to the very short term, let's look at the. I'll leave the Q1 on, and let's look at the previous week. So we have the previous, not this week, the second to last week. So right after OPEX, and this is this week's range. So as you can see here, we kind of doubled the previous week's range. It was almost 6, so we went to 12-ish, almost double as the target, and getting rejected here. So we are developing a potential horizontal range, and I think it's very likely that we will just swing above and below this one for a while, like at least throughout July and maybe a bit of August. Uh, but we can deviate quite a bit, as high as 450. 450 is extremely overextended, but that's also possible. And we apply the same principle. So we have this week's range. Let's turn the previous week off. We have this week's range, and the next target is basically half of this. So let's measure. We have 663, and if we take 663 and double it, approximately we get slightly above 450. So if we get a breakout that sticks, that isn't just a deviation, the potential for breakout is either deviation and then it gets back into the range and then it will go to the mid for sure, potentially even lower. And if it doesn't get back in the range, then it goes here and then it likely drops longer or larger. Let's take it one by one. So I mean, we saw where it's going if we have another breakout and it goes higher. So this is the target. If that is doubled again, then 457. I'll go back to the daily to show the what this is. So first on, it's the top, this bottom here, this top here with a small deviation. Let's zoom in a bit. So first target, which is slightly above 450. So it's this top here, this bottom here, somewhat of a top here, support here, and then it's the back test from April before we had the drop into the June of last year to make the low. So this is the next level as the resistance, and if this doesn't hold either, then the target is 457-ish, which is this low here, this top here, and this is a deviation, this top here, backtest from March. So it March it went up, dropped, backtested, and then dropped harder. So this is similar to here, like dropped, backtested this, then dropped harder. So this level and this level are very important and are the next one to the upside if we get more upside, which I am doubtful, but I'm always doubtful about it, and we keep getting it. So uh, use your own logic on this one to see if we go higher. Okay, so we go higher. What we always need to keep in mind is the AVWAP from the most recent low, and it it will 100% get tested within the next 2 weeks. This one. So the way it will happen, it can be, so we have this deviation, then it drops. Most likely it's going to be something like 448, 445. This will continue like this maybe. Uh, and when it meets it, maybe overshoot goes to the middle, then back up, and so on. If it goes higher, this will also probably keep going, and when it drops, it will meet somewhere around 440. If we go to 450, 440 will likely turn into support. Not exactly this high area. Most likely is going to be this. We consider this to be a deviation. For now, it's in the deviation range. We deviated here, but this backtest is the true level. So right now it's a deviation. It can go even higher, but if it goes below this, then it should go to the AVWAP here. Too many things. Let me delete some stuff. Okay, so we leave this one. Like I was saying, this is the true level. A bit lower. So 442-ish. And if this becomes support, it will go up. It can deviate a bit more and still come back down and test, let's say, this around 448. If it doesn't come back down, it goes higher, like turning support, then goes even higher to 450, deviate, and then it will drop probably fast and relatively hard, and it should meet this one around 440. And then we don't know, like it could, it will retest this, maybe it gets rejected and goes back down and goes even lower, maybe it recaptures and goes back up, and so on, don't know. So this is it for SPY. Uh, my my expectation is that we will be range bound. I think that's the main scenario you should be considering. So we go a bit higher early next week, like 444, 45. Then we turn back down, we test this AVWAP, and then we just go a bit sideways for a couple of days, or for before until the first week of OPEX. So we're gonna do this, and I think we go sideways until the 14th, and then we get CPI, I think, around here. And because of CPI, it will go crazy again because CPI will be very low this month. Okay, so that's the short term. Then when we go a bit longer term, we don't need this weekly pattern anymore. We can hide it. Want to look at AVWAPs? This one we don't care about anymore as well. So AVWAPs, and we have the February high, and this is, what is this, 2 or 3 standard deviation? Sorry, let me check. I forgot if it's 2 or 3. 2 standard deviation, and the this one, and the green one is the 3 standard deviation. So we are 2.5 standard deviation away from this AVWAP. Then the March low one, we are 2 standard deviation away from the March low one, and with potential free would be 458. Then from the October low, we are 2.5 standard deviation away from this AVWAP. The yearly one, we are 2.5 away from this one. Well, and the 8 all-time high one, we are not, we haven't reached that one. The last low, we are almost to 2 standard deviation away from it. The point is, we are very overextended, and most likely we will get a major pullback soon, which will retest the cluster of this AVWAPs. I don't know exactly which one will be support. Most likely the yearly one combined with the all-time high one. So all-time high is 409, and the yearly is 408. So these two will virtually meet. So when we get that big pullback, regardless of how high we get, I still think the target will be to retest one of these AVWAPs, or the combo of these AVWAPs. The one for October is even lower. So I would assume it's going to be the combo of these two, which as a horizontal level will match up with this 410 thing here. So 410 to 415 most likely. These will continue going up for a while, depending on when the larger pullback comes. The most likely being the week of OPEX, or the starting in the week of OPEX, and for the following weeks. I think we will see the bigger pullback and drop to somewhere around here. So 410, 412, 415, 410 to 415 somewhere. And it's going to be the combo of these two AVWAPs, sort of like this. And if it holds, it holds. If it doesn't hold, the bears are back in control, and it can get scary into the quarter end, into September. Remember, September is the scariest drop of the year usually, September, October. So if this doesn't hold, it's pretty bad, most likely for the bullish case and for the economy. Like, I don't expect this to happen unless something bad happens to the economy, not just the stock market. The stock market is in bull mode. It won't stop. Something needs to stop it, and the only thing that can stop it is actually the economy. Or I don't know, maybe war with Taiwan or something, but that's a very, very unlikely. Uh, so the long-term drop should be around these two levels. Now, let's move on to other stuff. And that other stuff is Qs. Oh, I forgot to also do the analogy. So far, this is holding up pretty well. Predicting a bit of a push above, maybe to 446 next week. And then we do the pullback to the Q2 mid, and then the range bound movement I mentioned earlier, which I think still stands. So for now, I'm happy with this overlay, and until proven wrong, I will stick to it. Okay, back to Qs, which also has its own overlay, and I will explain it a bit after we talk about the levels. So Qs, upside 379, 382. It is this high area here, low here, low here, and that's about it. And support this trend line. Like, Qs has to pull back more extensively, and we have to see the market migrate into lesser loved names. But this last push up to 380, I think is very likely because of Apple. Apple is looking like this. We have this horizontal range here, midpoint, top, and some overshoots here and here, overshoots down here and here. And the same logic I applied earlier, uh, we double this to get our next target. It says around 196.97, but I think it's very likely that we will overshoot to 100. So if we double this, we're around there, but it's not completely incredible to see a push to 200. And the push to 200 is likely because it's the biggest, it has become the biggest OI level for Apple. Like previously, highest level was like 250k before OPEX, and now it's gone above 300k. It's too, and there's quite a bit of interest for um, July OPEX. So I think Apple can push above 200, and that will be the top of this cycle. Then we get the larger pullback. Volume is okay, nothing spectacular. I mean, nothing bearish about it, but nothing extraordinarily bullish. It it doesn't have to move a lot. Like I think this is like 3% or something. Let's measure from here. So to get to the 200, it's 4%. Like Apple can do 4% in a day without any problems. And if it doesn't do it in a day, it does it over like 2-3 days. Uh, Anything from 1% to 2% should be fine for a couple of days, and we get above 200. And this is why I think we get that last push in Qs. Going back to here, Qs, and why I think the analogy will stand here as well. And we get the last push in Qs. Apple gets above 200, then we get the larger correction into the larger correction into the CPI print, and then we get another rally after the CPI print. Like the week of OPEX should be a rally, and the pullback should be coming after we reach this level. So last push up, both for SPY and Qs, and then we get a pullback, and then we go back up in the week of OPEX. So this will not break, or we won't have this kind of drop like here until we break this trend line. And this is also range bound movement. If I draw it like this, we can see this. This will be a deviation. Then we go into a range, we go sideways, and I expect the sideways movement until in August. And in August into September, we get a much larger pullback for the entire market, and then we see what happens afterwards. So those were the levels for Qs. For IWM, I'm not too confident in the overlay. Uh, I think it will underperform when Qs push, and then if the Qs actually drops, I think it will drop with it. So it's not a very good overlay for IWM, and I think it might also retest the highs here, like go above 190, maybe as high as 200, but seems a bit overextended because that's not the level. The level is maybe this, like 193 is the level. Yeah, this is too high. Yeah, something like this. This back the lows here, back this here, rejection here. So that's probably the level 193. So it can go to 193 early next week as well, and then I think it drops when Qs drop. Level is this one. This would be my target for upside. If it remains bullish for whatever reason, then 200, and then it should stop. DI is the most interesting is the interesting case here. We have this trend line that is bouncing on 1, 2, 3-ish. This is a combo trend line. This one from the top, and this one from the bottom. But it's kind of at resistance as well. I don't really see it performing extraordinarily well. What's the overlay say? Like it goes down, then it goes up, then it overperforms, and then it drops with the rest. Yeah, it seems pretty legit. Next level will be 448, 450. So that's the target for next week for the push with everything else. And then it should drop as well. Don't really see it breaking 350. It's a big level for TIA, but yeah, I can't read it very well. For VIX. Okay. So first of all, the big pattern for VIX is this falling wedge here. And I've been looking at it for a while. I know why it underperformed. I can explain it. So VIX is the difference between IV at the money IV for tomorrow, like so for tomorrow's expiration, and at the money IV 40 days from now, or something like that. What happened for OPEX was that uh, it was just too predictable. The pattern, the price movement was too predictable, and people got in 40 days out puts, but not in immediate puts. For VIX to go up a lot, there has to be short-term demand, and it has to be in backwardation. Uh, so this is a, a features curve when there is panic, because like anything, like backwardation, this is contango, and this is backwardation. So contango is the curve that says things are more expensive in the future. If you want it now, you can find it easily. It's easily available. You buy it, and there is no surge in demand for now. This is how markets usually structure. But when you're in backwardation, there is super high demand for now, and that means in VIX's case that means panic. But because the rally for OPEX lasted until basically the last day, like until Friday, uh, nobody was caught off guard. Everyone had ample time to buy puts or to buy VIX calls and whatnot, and it didn't cause panic. Like people waited until the last second, let's say, and then they knew that there was a pullback coming after OPEX. Then they bought like 40-day out puts or 40-day out VIX calls, and there was no surge in demand for like next day expiration. So 1DT VIX calls, let's say, or 1DT puts. And because there was no panic and demand for short term protection, VIX didn't go up. What happened was like 40-day out, it went much higher uh, than usually, but the 1DT put IV didn't increase. So that caused VIX to stay flat. And that's why we didn't get a big drop. Nobody was forced to buy protection quickly and at any price. So VIX didn't go up. Now, going back to VIX, when this type of thing happens, I've been looking back at it. There's the 9-12 range, and there's the 12-15 range. And there are multiple times in the past where it plays in these ranges. Like for example, from 2013 until what? So this is January 2014 until May 2014. It just played in the 12 to 15 range. There were some overshoots, obviously, because from time to time they are. But in general, this was the home for VIX all this period. Same from March 2015 to August 2015. It stayed in this range for quite a while. And for it to get out of the range, it has to do this kind of thing. Like it has to have a large surge up, not a small one. Then, if it goes below 12, It then stabilizes in the 9 to 12 area. It stays like that from May 2017 until January 2018, and not a very volatile period on the market. Uh, in 2019, before the COVID crash, it was going between 12 and 15, and the assumption right now is that it will find its home in this range. So unless something very scary happens soon, I think VIX will do this. When the breakout happens here, it will go above 15, maybe 20. But we apply the same rule. So let's say we get this. This is 3.9. Let's call it 4. So we go 4 above this. 4 above this is almost exactly 20. So for the foreseeable future, unless we get some type of panic, like bank failure, like economic unemployment goes up a lot, I think this is the range the VIX will play in. If for some reason we go below 12, which I don't think it's likely, we may even go to 9, but I don't think that is likely. So I think this will be the range where VIX plays between 12 and 15, with the occasional spike to 20. Yeah, something like this. So next week, I don't think VIX pops, but it should drop again. It should test 12 or slightly below 12. This is exactly 12. And then it will have a breakout because we get the larger pullback. And on the larger pullback, most likely it goes to 20. At 20, you can short VIX, and it should go back all the way to here, maybe even slightly below 12. But this is the expectation for VIX. Actually, not like that. More like it goes up, then sideways for a while, then up again, then sideways for a while, then up again, and maybe if it goes up, then we create uh, a new setup for VIX being elevated for longer. But for now, 12 to 15 with the occasional spike to 20. Okay. Now, if you watch my macro H2 macro video for that I put out a couple of weeks ago, the thesis is yields break out, dollar breaks out, oil breaks out, and performers will be there will be a rotation into energy, utilities, and healthcare. I still stand by that, and this week, because of the what was the event? Oh, GDP. Because of GDP came in strong. We had a breakout in 10-year. The others broke out as well and went higher, but I'm gonna use the 10-year to track this. Now, I don't think this is immediately breakoutable, but it seems inevitable that we will at least retest the highs here. I think we go actually much higher because the economy is continuing to be strong. We get unemployment data, JOLTS data, um, NFP data next week. If those are strong again, then yields should move higher as well. Most likely, we will get another rate hike at the July meeting, and that's it. But with the economy strong, the dollar should be strong as well. So the dollar should be breaking out as well. It hasn't so far, but it's building towards it, and I think it will do it. For now, we broke out of this long-term channel, and I think we will bounce and go higher because it's all relative basis. Like you keep hearing most likely about the economic data from Europe being very weak. A, a country's currency is a reflection of the economic power of that country. Right now, Europe is kind of fucking up and we're getting a recession. The US is not getting a recession. Well, one of them should be higher than the other. So the USD should be valued much higher than the euro, and it should start moving up very soon. Then, at the same time, if the country with the largest economy in the world is not slowing down, then demand for energy should be going up. And there is no reason for oil to be this low. Most likely we will get another yields rally combined with a dollar rally combined with energy rally. So oil has been accumulating in this area for a while. It hasn't broken down, although this area was supposed to have it break down for a while now. Like when we drop to this area, we go much lower. When we drop to this area, we go much lower. Here it was resistance, we went much lower. Now we have dropped to it, but rejection, uh, and it's about time that we get a move up. And I think the move will start in Q3. TA wise, I can draw some stuff. It's looking quite good. Like this is almost a breakout. We can maybe do this as well. You see that it's coiling up. This is all accumulation because it hasn't broken down. This is all accumulation, and it should be turning up very, very soon and doing this. And we have quite a bit of accumulation. I can use Bitcoin as an example, but it doesn't really matter that much. But we've been accumulating oil since November, and now we are in July. It hasn't broken down. When it breaks out to the upside, it will have a huge move. It will be fast and furious. And when we look at XLE, just broke out on Friday. Again, might not move immediately, and it might have one last pullback with the market pullback that I'm forecasting for like the second week of July. Like it might drop as well, do this again. But when it moves, this thing will move. Utilities, same kind of thing, or same kind of pattern. It's holding here, holding on this trend line, moving up. It's down, it will move higher. Energy and utilities are very connected, so they should move up in tandem. When energy goes, utilities will go as well. Last but not least, healthcare, because it was beaten down, almost have a breakout on Friday. This should do something like this, and then it will go to the highs again. Well, that's it for the video. I'll do the weekly selection video separately. Hope you guys enjoy this. Have a good day. Bye bye.